So hi everyone again, and thanks very much for the invitation to that great conference. It's a real honor and pleasure to be able to speak to you all about the future of financial services and FinLeap in specific. So just to quickly introduce myself, I started my career with BCG, so it's a fantastic sequence of speakers here. Worked there 10 years with a focus on financial services, insurance, and M&A, and switched to the digital world in 2012, where I was a CEO of 2 different online companies in Berlin that we were able to sell to strategic buyers. I joined FinLeap as a managing director in summer this year and tried to combine now these 2 worlds and support our existing ventures in the portfolio to find the best strategy to grow their business. So talking now a little bit about digitalization in the financial services industry. We've seen great models in other industries that have probably a lot of more complexity, meaning physical goods that they're trying to bring to you all and us than financial services. So looking at the top winners in the industries, like Amazon doesn't own any books, or Spotify doesn't own any music, or Uber has no cars. So why the hell didn't financial services start earlier to digitalize their purely information and virtual-based products? Probably the pressure wasn't enough, and now it's there. The customer requests better products at a cheaper price, higher transparency, greater user experience, and the banks and as well insurance companies feel a lot of pressure, especially on their cost side. So the margins are shrinking. Now is the place for new and innovative business models, and this is why we are so enthusiastic about fintech. Currently, we see 4 different approaches how to digitalize financial services. The first thing is big incumbent players trying to transform within themselves by putting billions of euros, US dollars, zloty, into transforming their processes by automating them, working on their legacy systems. This takes a lot of time and probably more money, and let's see if they really succeed with it. A lot of them invest in startups to learn how the young and wild people do it. And then, this is something that is really important in our industry. A lot of tech players, platforms, go into our market. So I think the payment play will probably be one of those guys, so Apple or Alibaba, who have the customer access and can provide a great user experience rather than a bank. We at FinLeap believe that the digital revolution will come from new models that will be created. So talking a little about FinLeap, what we are is we are a fintech company builder based in Berlin, and we differentiate us from, let's say, accelerators, consultants, early stage investors through a vertical focus. So we just do fintech and insurtech, and a high commitment to our ventures. So we build them, we stay with them, we try to help them accelerate, grow their business. So coming from this perspective that company building is a great approach to revolutionize and really disrupt this industry, our goal is to build the best fintechs in Europe. To get there, we think about 3 pillars that we need to build sustainable business models. The first thing is entrepreneurial execution. The second would be industry expertise. And the third one is the tech capabilities. To talk about that a little bit more, how those assets along these 3 pillars reduce the failure risks of early on startups is the key ingredient of FinLeap, why we are able to attract so many people willing to found businesses with us. So I would say that the key risk that you have in the first 12 or 18 months of building a business, the team risk, the execution and scaling risk, and the funding risk. And all those risks we try to solve and help our founders by providing this range of assets you see on the slide. So talking about the team risk. Financial services, fintech, is a complex industry. So the hurdles regarding regulatory and legal stuff, that much money you need to really come up with a technological solution that really serves the customer better, that much money you need to acquire customers at high customer acquisition costs in a market with low margins and even shrinking margins, is a tough game. So what we try to do at FinLeap is combine a team of digital entrepreneurs who built different models beforehand in fintech or another industry, who know the customer pain points and are willing to go in an innovative way. People coming from the industry, so bankers, insurance experts with 10, 15 years of experience, who love to change the industry. They know the incumbents, they know the market, they know the existing problems, and can solve all the legal and regulatory issues involved. And the third person in our typical funding team is the tech guy, coming from probably the best places in the world, for example, Israel or other places, learning really how to do state-of-the-art technology with everything you can imagine. This is a team that probably would have never met before in a bar and decided to build a business together. So this is one magic ingredient that we use to bring up, to come up with the best team for the idea. Regarding the execution risk, I think what we have is a fantastic network, not only to investors, media partners for customer access, fantastic talent. We just receive more than 1,000 applications a month from all over the world, of senior people especially. We have access to and knowledge regarding all regulations, to access to the regulatory authorities in Germany and Europe. And we have internal people applying for BaFin licenses, writing them on their own. So this is the best ingredient to really get the license and start the business, be compliant with the law. This regarding the execution risk, and the third risk, which is the funding risk, is even probably higher in the first months when your business model doesn't scale. So we can not only seed finance the company with 500K to 5 million, we can also bridge finance a model which didn't scale. For example, Valendo, who's an online broker, started a pawn online broker, who started in the B2C area, didn't scale. Then we turned the business around to a B2B player. Now they're growing nicely and will become profitable already this year. A standalone startup team would never have got that bridge financing money to turn the business around. So this is something that we can do. So where does this systematic company building approach lead to? One is fast time to market, and the other thing, coming across new models. So Solaris is a good example. We started Solaris as a white label technology bank with a full banking license because we weren't able to find the best white label bank for our own fintechs. And it was done in just 11 months. You see a lot of other examples on the slide. So looking at our portfolio, we have now 10 ventures up and running, more than 300 people working at FinLeap in our ventures, with a focus on B2B models, some B2C models as well, but they always have a second pillar, B2B2C cooperations with banks, financial brokers and stuff. And this is the basis for our vision we're looking for the next 3 to 5 years. So we want to build a fintech ecosystem by adding 4 to 6 ventures every year in 3 different layers. So we strongly believe in the infrastructure players like Solaris, and we will build additional ones. We're currently looking at one in the insurance space because we strongly believe that you need the technology and the license to build new models on top of the infrastructure. We will build tech players, not only enabling banks to automate and digitalize their processes, but as well serve smaller enterprises with banking products and solutions. And we will try to bundle all the product niche players serving consumers and enterprises into platforms. And then you can do plays on horizontal and vertical layers. So this is our plan, and we're really enthusiastic to build this ecosystem first in Europe and probably after a couple of years in other geographies. Thanks very much. So if you would be interested in joining that ride, please get to me. Thank you.